So why turn down $70 million?
You know, in an era when funds are raising more and more money, we thought that for us, it's about being disciplined, being focused, and that is a small fund size, highly focused strategy, focus on only consumer, and really living by that. And so turning away over $70 million, focusing on our $180 million fund was our way to really exemplify that.
Do you think you couldn't have found enough good consumer bets to invest in if you had taken that much money?
So the ubiquity of consumer deals to do, there's a ton to do, and I think we're seeing a lot of great deals. Maintaining our small fund size really allows us to be focused on what really matters. We believe that every year there's going to be 1 to 2 top consumer deals that matter, and we laser focus on our time, our efforts, entirely around sourcing those deals.
So what are the top 2 deals that matter right now?
Well, we're spending our time looking for those. If you have any suggestions, let me know. But we're looking in very specific categories and think that there's a lot to happen in these legacy industries and brands where there's no consumer loyalty, there's no consumer interest, and it actually is a consumer pain point. You could think of industries like healthcare, insurance, the way people access and think about their finances, all industries that are ripe for a great, strong, consumer resonant brand.
So where have you put that money then in the last year?
Yeah, you know, we've been spending a lot of time looking quite broadly in a number of different categories. Consumer healthcare has been something of deep interest for us. If you think about the reproductive rights of women and the number of different areas in a woman's life that she thinks about a reproductive system and the different ways in which she accesses it, we're investors in a company called Modern Fertility. Modern Fertility is a brand entirely focused on the woman's fertility and her ability to understand where she is in that and make choices and feel empowered with that data.
So what's your take, given that laws are advancing to potentially curtail women's reproductive rights, and you've got a company like Netflix saying, we won't work in the state of Georgia if this happens?
So we think that a lot of amazing founders are out there figuring out what are the ways in which companies can enable consumers to have content, community, commerce, ways in which they can take control of their own health, whether that's something like Modern Fertility or seed investment in a company called Bloom that's empowering teens right when they start their period. There's a ton of opportunity to really serve the consumers at their point of need.
Meantime, we've been talking a lot about trade, and how do you think what's happening between the U.S. and China, and now potentially the U.S. and Mexico, is going to impact the VC industry?
Yeah, you know, in the consumer space thus far, the huge impact has largely been in the agricultural sector, and it hasn't gone yet to really impact some of the early stage consumer startups. That being said, we're seeing companies in the consumer electronics, consumer physical products moving away, or at least thinking about contingency plans for what happens should the trade wars magnify and amplify. And that's looking for a diversification of their supply chain, of their manufacturing, and making sure that they have plans really set around that.
So how are you thinking about this internally as a firm? Is it changing or impacting the decisions that you're making?
It's a board conversation, and making sure that that conversation is happening at the board level amongst our portfolio companies, especially ones with physical products, and bringing that up and ensuring that those plans are in place for when the companies need to address something that's happening amongst the 2 countries.
Now, you've got 6 partners at the firm, half men, half women. How did you do that, since other VC firms seem to find it so difficult?
They do. So we are really proud to announce that with this $180 million fund, we are gender split 50-50, and we are intentional and deliberate in making sure that we have a gender split in an industry where only 11% of check writing partners at venture capital firms are women. We're proud of our 50-50 split, and that really shows in our results. We get an unfair advantage in finding companies, understanding areas of business, understanding areas of consumer, with women controlling 70 to 80% of consumer dollars. We think it's our advantage. We think it's our ability to win, and it really aligns with our values of winning the right way.
You recently did a thought experiment around Facebook and the potential unbundling of Facebook. You got a bunch of founders together to talk about it. What did you learn there, and how will that drive your investment strategy?
Yeah, we're thinking a lot about all the behaviors that take place on Facebook, and some of the behaviors are not well accommodated for on the platform, and we believe that they can be broken out and made into their own billion-dollar businesses. An excellent example of this in the past has been Discord, where that behavior of communicating could have lived on Facebook, but Discord is now its standalone business. And so as we look at other opportunities on Facebook, these massively engaged communities, whether that be around people living with a certain type of chronic illness, immigrant communities, recommendation engines, whatever it may be. We think there's opportunities for these behaviors to be broken out, live as their standalone company, and build something highly engaging and compelling for people.
So do you think there could be a new social network?
Yeah, I think that the way we think about it is how are people engaging in their day-to-day lives, online, offline, and what are the needs that they have, and what are the companies, the products, the services, the applications that will enable them to meet those needs.